Good morning, ladies and gentlemen. Good morning, everyone. Good afternoon for those who are in other sites, in other places in the world. I don't know if I have to say also good evening, if I have to, so good evening to those who are watching us from far, far away. I hope everyone is doing well so far. I would like to welcome you to this live trading webinar. My name is Theo. For those join us for first time, obviously. And I hope everyone has a great time so far. How are you guys doing? You can use the chat box below, either from Zoom or from YouTube, and you can communicate with myself. So I hope everyone knows how to use the chat box. So before we start, as you can see, just to make sure that you understand that this is for general information, these webinars, and they don't intend to provide any personal recommendation or any investment advice. So let me share the screen with you to just walk you through some social media channels. So this is the Instagram page. Here we put lots of reels, lots of stories on a daily basis. And every Wednesday, I do the 30 seconds market update. We also do TikToks about trading, about investing. We post a lot of trade ideas in stocks. Okay, we put many quizzes, especially on the stories. So it will be nice if you engage yourself with the Instagram, so you can, in my opinion, you can use it also as a good learning place, not only just for entertainment. Okay, so here is the link. I will appreciate if you follow us on the Instagram. For those who are new, definitely this is the Facebook page. Please make sure you subscribe on the Facebook, enable the notification buttons. Every time we upload a video, a webinar, you will be able to receive the notification. Here in Trading Spotlight, I will definitely encourage you to watch the webinars if you have time. If you are interested about the trading psychology beside price action and fundamental, one of the most important aspects of trading profitability is how do we think, how do we feel, and how do we act. So trading psychology, it's a very, very, very important, it's a crucial aspect of trading, ladies and gentlemen. And the last one I want you to know, it's about the webinar in 3 days, in 4 days. Myself, Pauls, and Jens will host this webinar. We're going to go for 2 hours live with you. We're going to talk about 2023 opportunities in trading, in investing. In my opinion, it's something that is going to add a lot of value to your trading and investing, guys. So I will share with you. As I said yesterday, this exclusively for Admirals live accounts only, as you can see here. By all means, there is no obligation, especially for those who are not clients with us here at Admirals. There is no obligation, guys, for you to go through if you don't like. Okay, but in my opinion, it's I think it's really good. So you can, if you register, you can contact the customer support, or the customer support will contact you, whatever, and they will help you to register yourself. Again, nothing is obligatory, nothing is mandatory here. Okay. And yeah, pretty much that's it from this part. Now, let's go to the calendar. Early this morning, we had in China the inflation rate. Hello, guys. Hello, everyone. Hello, hello. I see a lot of people, and I'm happy when I see a lot of people today. Maybe you're excited because it's Friday. Yeah. Inflation rate, as we said, in China, forecast was 1.6%, actual 1.6%. Previously, it was 2.1%. So maybe we're going to start seeing some stability in the Chinese economy. Who knows? That's what the events tell us. Now, for those who are more into technical analysis, as you understand, markets discount everything. Price action shows what happened, and then the fundamentals and the newspapers, they just announce the reason. Okay, but we see that movement already in the price. So as we say, price discounts everything. Markets, prices discount everything. By all means, if you are a fundamental trader and you are trading purely based on the fundamental factors, I'm sure you know how to position your trades. So you combine absolutely everything together. So today's top headline, ladies and gentlemen, banks should be wary of crypto, top US regulator says. SEC asks public companies for more information about crypto exposure. Senate Democrats press ahead with their own spending plan as talks stall. US to levy human rights sanctions on Russia, China. Credit Suisse completes $2.4 billion capital raise as it advances cost cut. US sanctions Turkish businessman, it says, brokered oil sales for Iran's military. FTC sues to block Microsoft's acquisition of Activation Blizzard. And Google Ad software disrupted for publishers large and small. Any comment on this, guys? Good morning. Good morning. Hello, everyone. If you want to comment on something, please go ahead and do it. That's why we read the news, the top headlines as well. Maybe you want to say something about it. So, US dollar index, this move to the downside. We make lower lows, lower highs. We had our trend line in place. The price got rejected 2 days ago. So we are still we said that at this point, we're not going to do much, but taking in consideration this rejection here exactly below as well, the 200 moving average, we said that this dynamic resistance can definitely help the market continue to the downside. Now, we had yesterday closed below this 200 moving average. The market really, it looks like it's in this push to sell off. So hopefully we're going to see continuation of this move, and it's not going to be just a false push to the downside. So for now, I'm still happy to sell the dollar. DAX 40 and the rest indices, they are getting appreciated a bit because of the US dollar sell off. So we had this, let me zoom in a bit. If you are trading the price actions, you see this length, this gravestone, I can say it's not a sorry, it's not a gravestone. How do they call it in candlestick? Dragonfly. This is a dragonfly. It's not a hammer, because the hammer, it's a candlestick pattern with some real body. This one here has the opening and the close very close to each other. So it's the dragonfly. It's a bullish pattern. especially when it appears during a downtrend. Short term, very short term, doesn't matter. It has bullish implications. So people, they trade it. Then what do we have on the FTSE? We broke below this trend line. Usually the break of a trend line, it's the first signal of reversal, of trend reversal. We have a trend here. The trend line has been broken. We are waiting now to see the return move. If it's going to be a return move, then most likely we're going to experience some sort of rejection somewhere. And if this is a valid break, we're going to see follow through. But for now, the US dollar is showing that sell-off. So the average most likely can push to the upside. Okay. We don't have any structure to that we understand here on the Dow Jones. Remember, guys, since we saw this double bottom here, and then we saw this break to the upside, some people, they enter right on the bullish engulfing, more than 2 to 1, 3 to 1, whatever was the target here. Some other people, they use this pullback to enter. That was a trending market, clearly trending market. Now, trends, they don't last forever. When they are about to reverse, they take some transition time. So we have to understand that, and we have to look for another trending markets. Okay. This one here, it looks good, the Nasdaq and the S&P. But again, very low probability trades, because we have this parallel resistance and support lines. Price, it's moving in between them. And maybe we can see this bullish candle to push to force price to go to the upside. Same with the S&P. What I don't like in the S&P is that we had this trend. We had this trend line here. And now the price is founding the support here. But we are approaching this trend line now. Trend lines and moving averages considered as dynamic support and resistance areas. So that's why we just changed the trend line accordingly based on the price action. And in this occasion here, we see that the price can still climb to the upside, but maybe it can find that strong resistance on the trend line. Now, if we have a 2 to 1, 3 to 1 reward to risk, we can take the trade. But if the probabilities, if the reward to risk doesn't favor, we're not going to take the trade just because we are afraid to miss out on a trade. That's very important for trader, guys. Please make sure you understand it and apply it. We don't enter trades because we are scared not to miss out of a trade. We enter trade because we have a good reward to risk probability. That's going to separate us from the amateur traders that they can't get the game right. It's nothing to do with trade knowledge. It's nothing to do with how well you know the price action. It's only as simple as you understand, you know how to read the trend, and then you put the probabilities and the risk-reward ratio in your favor. That's all. These two ingredients can really make you a brilliant trader. But it sounds too simple for the human brain, and sometimes humans, they tend to trying to find things that they are difficult in order for them to feel that it's worth on something. Okay, so pound US dollar, if we're going to have the sell-off on the dollar, then the pound US dollar, it's going to keep pushing to the upside. However, we are here at this resistance, this horizontal resistance. It is a strong resistance, though previously the price retested a couple of times. It's the most recent resistance. And we will wait for price to push through with two-day close above this resistance for us to consider it as valid. Can we play the breakout? Definitely we can play the breakout, but where it's going to be your stop loss and how long can you going to stay in the trade? I think someone yesterday said that it's on this trade here, from this point here. It's easier for you to get into the trades from the retracement and not right at the top, because you have a good area of having your stop loss when you're buying. Okay. Same applies with the euro against the dollar. Remember, after we had these two closes above the resistant horizontal, we said that this bullish engulfing can create the push to the upside. We didn't recognize any strong resistance until this area here. That's where I believe it's a strong area of resistance, and to be more accurate at this point. So this bullish engulfing has high probabilities to push the market to the upside. Then we initiate some trades here for the anticipation of this breakout. It's different to anticipate, to play a breakout on a pattern, and it's really different to try and play a breakout on a strong resistance. We did this breakout because we identified that we have this strong push to the upside. Then we had this kind of ascending triangle. I've done that webinar about trading patterns, continuation and reversal patterns. You can refer back to the webinar to understand this this price behavior here that called ascending triangle. It has bullish implications, and then with a strong price action here, we anticipated a break to the upside. The good thing with this type of patterns is that when you enter here on a breakout, and if you put your stop loss below this bullish engulfing line, it's like you have your stop loss also below the range of the pattern. So it's, if the price, really guys, if the price doesn't play the breakout here and it comes all the way here and it takes our stop loss, what does it mean? It means that market changed direction, right? Because it's not, it doesn't happen in the middle of nowhere. It happened in a very important point. And what does the market tell us? That I'm continuing the down move, the downward move to the downside. So we're going to look to sell. Simple as that. But now the market make this higher high. We had this this retracement here. Yesterday, 2 days ago, we thought that maybe that's a weekly, it's going to be a weekly retracement, a weekly sellout and all this stuff. But this bullish engulfing confirmed that buyers are still in control and they are willing to bid the price higher. So with the sell-off of the dollar favors the push of the euro against the dollar to the upside. I'm still in that trade. I don't know if other guys are still in that trade. You can let me know, or if you took the trade. USD against the CHF. If we're going to break below this, it looks like we are breaking well below these lower points here, this minor support. And definitely we're going to look for shorts, because then it's a clear push to the downside. The next target, it's going to be this area of support. That's the one we can see right now. Yeah, the lowest point price got accepted in the market. So, and let's measure the distance of the pattern. So what do we have here? We have this move. If if this is a descending triangle, based on what we can see, if we measure from here, from point A to point B, it calls the base, the height of the pattern. So we will duplicate this distance and we will see the first minimum target. And the first, so if we say this from the breakout, it's 230. So from here up, 230. Yeah, 230, it's somewhere here. So the market, maybe it's going to consider this as a valid first support based on this implication as well. Yeah, so if we're going to break below, I'm going to look for entries short, definitely, and hopefully a good reward to risk up to here. But you can see the pattern now. If we're going to push lower on the USD against the CHF, it means the USD is weakened, the CHF is getting stronger, but keep that the USD is getting weakened. So USD weak, then it can help the euro against the USD to push to the upside as well, and the pound. So let's move on. With the Aussie still in this climb to the upside, the New Zealand, we said one of the strongest currency the last few weeks. CAD is not that strong, Canadian dollar. USD JPY, we still expect to see some follow through to the downside. So we'll see what's going to happen here. We are in this downtrend. Aussie against the Japanese yen, we are waiting for some clarity here, so we want to go short. Euro against the Australian dollar, the euro is find some resistance here. Maybe it's going to sell off. We came from this intermediate upward trend. Then the market is just moving sideways here. It doesn't even clearly show us some triple tops or a recognized pattern. It's just drifting sideways. Australian dollar against the Canadian dollar, we said we were looking to buy. That bullish engulfing here, if you bought it, that was on 40 pips, and the market gave 2 to 1, so I didn't buy it, to be honest. Gold, if the US dollar is going to push to the downside, definitely we're going to see gold pushing to the upside. Now, that's the resistance here, very strong resistance. The market sold off, bearish engulfing, didn't follow through. Today, is it going to follow through? We don't know. Crude oil, finally, we broke below this one. We said we had one trade. I took one trade from this point here, and the target was somewhere there because we have this inside resistance. So now the market is trying to push to the upside. If I got involved here, no, because it wasn't a clear pattern. I didn't know what the market is going to do. Now, because it was ranging here on the short-term trend, the market now, it shows us clearly that it wants to sell off. So any pullbacks, any corrections, we can use them to sell it. Euro against the Canadian dollar, we're still looking to buy this one all the time. It's a buying opportunity because the trend is moving upwards. Questions. I bought the pound against the dollar. Brilliant. That's great. Hi, Theo. What is your analysis on pound against the Japanese yen? Really is drifting sideways, guys, this one. I really don't know if you bought it based on the weekly chart. Sometimes the weekly chart sometimes the line chart, it's much easier to spot what's happening. But really, if it's not that clear with the candlestick or the bar chart, then it must be that the market it's a real mess. So what do we see here? On the weekly chart, I can see that we have this higher high, and then the market it's moving, is drifting sideways around this bottom here. So if I go down to the daily chart, you can see that the intermediate, the long-term trend is sideways. If in the market, what is a long-term trend? It's a period of, let's say, up to 9 months. Anywhere from 6 to 9 months or 9 months to a year, it considers a major trend. Our primary or major trend, it's sideways. So how can we have high probability trades if we buy or if we sell? And traders, they don't understand fundamental of trading. They don't understand what is the trend we are looking to analyze. First, we see the major trend, then we see the intermediate trend, and then we see the near-term trend. Like 9 months to a year, we see what the market is doing. Easier, if you put it easier, you just zoom into the max, then zoom out twice, and you have the major trend. Then take the half of the portion, let's say 2 months to 6 months, and have a look. What's happening? Do I have a trend within this? That's the intermediate trend. So intermediate trend, let's say from here to there, about 6 months. What does the price is doing the last 6 months? Nothing. It's just moving sideways. I don't understand. I don't see a trend. And then we go to the near-term trend in about, let's say, a month or a month and a half, about 6 weeks. So let's say from beginning of October up to here, let's find some entries. But where? What is my direction? What's my direction in a market that the major trend is sideways, the intermediate trend is sideways? What is my direction? Am I buying or am I selling in the short term? Guys, I think that's a very, very helpful what I just explained you, because that's how you should analyze the market, especially when you are not on the webinar with me, when you are alone. So we start from the major trend, then we go down to the intermediate trend, then we go down to the minor near-term trend, and we see where we stand. If we don't understand what the trends are doing, then better to look for markets like this. This one here, clearly uptrend. How easy is to trade this one? How simple is to trade this one? Much, much simple. This one here, downtrend. How many did you participate in this downtrend to sell something? It's much easier to trade this one, the Aussie against the Kiwi, instead of the pound against the yen. Right? Cherries, CHF, JPY. Yes, here it's a 50% retracement. So what's the major? But Cherry, you have to understand that you are coming. You are at you just came from a very, very strong level of support. That was a resistance, broke, acted as support. The market from this support just pushed to the upside. So this has to tell you something. Okay. If you structure the market a bit, let's have a look. What can we find here? First point to the second point. It's still, it has room to move to the upside. Definitely, it should be a 50% here. Retracement, there you are. Now, if you're going to sell it, where your stop, yeah, if you are selling from 50%, but where your stop loss it's going to be, where your profit target is going to be, just make sure that you get good reward to risk, so it's worth to risk on the trade, right? All righty. So, guys, today is the last day of the week. It's Friday, so be careful with your trading. If you had some good trades along the week, I think they were few good opportunities we talked about. And I took this trade. I don't know if you took that euro. Some people, they took the pound. Well done. About the crude oil, if you took it and you make some profits there. If you are around and you are trading, look, if you are around and you are trading intraday, please make sure you find some smooth trends on the daily charts like this one here. It's obvious. A trend on the daily chart, it's always obvious. If you put, if I zoom in here, okay. Do we have a trend? Can you please answer this question on the chat? Do we have a trend? And if we have a trend, where does it going? Is it going up? Is it going down, or is it going sideways? Okay, I bet everything that if I ask 100 traders like you see everybody, it's saying that this trend, it moves to the downside. Of course it moves to the downside. It's so obvious. So when you are trading intraday, or when you are trading 30 minutes, 1 hour chart, even 4 hour chart, why don't you just look to find a good sell entry points, and that's it. Make your life simple. You don't need to make trading complicated. Okay, now if you are telling me that, Theo, I'm going intraday and I'm trying to trade the CHF against the Japanese yen, or you are trying to trade intraday, look at these guys. Look at this. The Aussie against the CHF intraday. I mean, what's your probabilities? It's going up, it's going down, it's going sideways. Just try to keep things simple, okay? They don't need to be complicated in trading. All right, ladies and gentlemen, it was a privilege and honor to be with you this week as well for the webinars. I hope that you have, yes, David, that's true. I hope you enjoyed, you gained a lot of value. I wish you to have a nice weekend, get some rest, and I look forward to see you again on Monday at the same time. Thank you so much. Bye-bye.